Governor Gavin Newsom announced this week that a handful of insurance companies will come back or continue writing homeowners policies in California. It comes as families have been grappling with high insurance costs, losing coverage altogether, or forced to use the California FAIR Plan, which is the state's insurance of last resort. The insurance crisis magnified when 3 of the largest companies paused or stopped writing policies. In 2021, Allstate quietly paused new policies. In May of 2023, State Farm made a similar move. A year later, they did not renew 30,000 existing policies, leaving families in limbo. And Farmers Insurance began limiting new policies in July of 2023. The California Department of Insurance said those 3 companies accounted for nearly half of all the policies written in the state. And they were not alone. A total of 7 of the 12 largest insurance companies by market share either paused or restricted new policies in California during this time. Since then, state leaders worked to change state insurance regulations to lure those companies back. Those regulations took effect late last year. The new rules allow insurance companies to consider new factors when they set premiums. That includes the likelihood of a catastrophe and the cost companies pay to insure themselves. In exchange, the companies have promised to provide more coverage in high wildfire risk parts of California.
The reforms we've just put into place allow for more rapid rate increases. And that's the pressure point now as we move from about average to below average in our rates. We're now starting to see those tick up. But the benefit of that now, part of the strategy, is a requirement to come into California market and also to insure in what we refer to as the WUI, which is the wildland urban interface, and to cover 85% of the WUI in return for those rate increases.
California Insurance Commissioner Ricardo Lara joins us now from Los Angeles. Mr. Commissioner, thank you for making time.
Thank you. It's good to be here.
We know 5 companies have now committed to California. Has there been any progress with others, especially those major insurers like Allstate, State Farm, and Farmers?
Yeah, we're absolutely talking to all of them. Stay tuned. We expect more to file rate files under the new sustainable insurance strategy of ours. So we're continually having these conversations. So we expect more in the next coming weeks and months.
Is there a timeline or a goal for that? I know you were expecting some stability in 2026.
Yeah, I mean, we're seeing already, the market respond. Even as we were setting up already the implementation of sustainability, we started to see markets already coming back. Now you're really starting to see insurance companies, like you said, 5 already coming back, opening new lines, expanding in California. It all depends. These ongoing conversations, different companies have different footprints, different types of businesses in the state. So, we're having these conversations now. The important thing is our sustainable insurance strategy is done. We're implementing it, and we're having these fruitful discussions with the companies. So they recognize that we've done the hard work, we've made the tough decisions, and now we're entering these conversations, and you're going to see more companies entering the state.
Your department has noted the 5 companies that are prepared to stay in the state with those new rules. They're asking for a 6.9% increase. The governor mentioned earlier this week these new regulations will allow for, in his words, more rapid rate increases. Is that how you would characterize what could happen to insurance bills for Californians?
Oh, well, these rate files are still going to have to be reviewed. They have to go through our transparent process. They need to be accurately reviewed. They need to be, looked at by our attorneys, by our actuaries, to be determined if that is going to be the actual final rate. But what's different now is that these rates under our new system, unlike before, they have to commit to write and stay in the state and commit to writing where they once used to abandon and non-renew people. That is the new part of our strategy. And it is the only agreement that exists in California and the first of its kind that no other state has. And that is the beauty about our reform, that they can no longer just abandon these communities. They have to commit to stay and grow in the state and go back into the communities that they once abandoned under the new rules.
But with the new rules and the new system, what will the California Department of Insurance do to protect consumers and to prevent private insurance from becoming unaffordable or from putting people in a situation where they're still relying on the FAIR plan because it's so expensive?
Absolutely. And this is the other part of our sustainable insurance strategy. Hand in hand with these rate files, the insurance companies not only commit to writing more in the wildfire distressed areas, but they also at the same time have to depopulate the FAIR plan. They have to get homes out of the FAIR plan, offer them traditional insurance. That is the agreement under our new rules. Because we don't want a growing FAIR plan, we want those homes out of there as well. And then additionally, for the first time, mitigation is gonna also be reflected in the new rate files. So that's also gonna be taken into consideration, because I heard time and time again from consumers, I'm spending thousands of dollars and my rate is still going up. It's not being considered into my bill. So that is also going to happen for the first time under these new rules. So not only are insurers committing to stay in California and grow, they can no longer abandon our communities that have been ravaged by wildfire, but mitigation is going to be taken into account now into the rate, and they have to depopulate the FAIR plan. That is the unique part of our plan that never existed before, and that is unique to California. No other state has this agreement, and this is why we feel that we're going to see, the rates come down and stabilize. We're going to continue to see insurers come into California, and in the long term, we're going to see a rate stabilization for the long term in California and stabilize and get us finally out of this insurance crisis.
Insurance is what you oversee specifically, but I mean, on the topic of mitigation, I know that's one example, but could state lawmakers and the governor do more to help you get companies back and keep prices down in other ways outside of what you oversee?
Absolutely. We've been working this year, for example, on mitigation. So there's a bill right now sitting in the governor's office that will create the first ever mitigation grant program in the country for fire that will give money in people's pocket to work on that wildfire mitigation that not only saves your life and saves your property, but brings the cost of insurance down. That is critical for us to make sure that we're working hand in hand with the legislature to create these programs to get money back in people's homes and in their hand so that they can do the work, so that work can be reflected in their insurance rates and bring that cost down of insurance. And guess what? It also keeps insurers writing in those communities. So it's all interconnected. Well, of course, we're going to continue to work with the governor. Hopefully he signs this bill, and we're going to continue to work with the legislature to provide more resources to work on mitigation that is key to bringing the cost down and keeping insurers writing in California.
All right, Mr. Insurance Commissioner, thank you so much for making time.
Thank you. Appreciate you.